Hello and welcome back to the Ontario Mortgage and Real Estate Insights podcast. As always, I'm your host, Steve Hamoan. Whether you're a seasoned real estate professional or just getting started in the market, this podcast is your go-to source for the latest updates, trends, and regulatory changes affecting the industry. Let's dive into today's first story. The annual pace of housing starts in Canada saw a significant jump of 16% in July compared to June, according to the Canada Mortgage and Housing Corporation, or CMHC. This increase was primarily driven by a surge in multi-unit projects, which saw a notable rise for the month. The National Housing Agency reported on Friday that the seasonally adjusted annual rate of housing starts for July reached 279,509 units, up from 241,643 units in June. This data is particularly interesting given the current economic climate and the challenges facing the housing market. Maria Solovieva, an economist at TD Bank, commented on this development, noting that builders broke ground on a larger than expected number of units in July. She highlighted that Ontario recorded its best month in over a year. However, she also pointed out that despite this rebound, housing starts are still below the multi-decade highs observed in 2021 and 2022, especially for single and semi-detached units. Solovieva further noted that while multifamily units have shown growth, this might not last long. She expects a decline in multifamily units soon, given weak presale activity in recent years and elevated borrowing and construction costs. This is a crucial point, as the supply of affordable housing has been a significant political issue, with governments at all levels trying to boost new construction. This report from CMHC follows figures from the Canadian Real Estate Association released on Thursday. These figures showed that while home sales in July were up 4.8% compared to a year ago on a seasonally adjusted basis, they were down 0.7% from June this year. BMO senior economist Robert Kavchich also weighed in, stating that residential construction activity remains sturdy in Canada despite the clear slowdown in the resale market. He emphasized that the fact that such a cyclical component of the economy has not buckled under sharply higher borrowing costs suggests that more structural forces are still at play, outweighing some pockets of weakness. Breaking it down further, CMHC said the annual pace of urban starts rose 17% to 261,134 units for the month. The annual rate of urban starts of multi-unit homes increased by 21% to 217,306 units in July, while the pace of single-detached urban starts saw a modest rise of 2% to 43,828 units. The annual pace of rural starts was estimated at 18,375 units for the month. Additionally, CMHC mentioned that the 6-month moving average of the seasonally adjusted annual rate of housing starts in Canada was up 3.2% at 255,783 units in July, compared to 247,840 units in June. This moving average provides a more stable perspective on the trend, smoothing out monthly fluctuations. So, what does all this mean for the Ontario real estate market? With Ontario recording its best month in over a year for housing starts, it's clear that there is still strong demand for new housing, particularly in multi-unit projects. However, the challenges of high borrowing and construction costs cannot be ignored, and they may impact future growth. It's a dynamic situation that we'll continue to monitor closely. Ontario home prices rose slightly in July, continuing a trend of broad stability set in February, figures released Thursday by the Canadian Real Estate Association show. On a year-over-year basis, the average single-family home in the province sold for $959,600 in July, down 5.2% from the average of $1,012,400 they sold for in July 2023. The numbers are seasonally adjusted and do not take inflation into account. Inflation, depending on what measure you choose, is running at between 3.4 and 3.7%. With another rate cut announced on July 24th, we have now seen 2 rate cuts in a row, and the expected pace of future policy easing has steepened considerably, with markets now anticipating rate cuts at every remaining Bank of Canada decision this year, said Canadian Real Estate Association senior economist Sean Cathcart in a release. On a province-wide basis, prices for condominiums in a year-over-year comparison fell 6.7%, and townhouses fell 4.3%. While it was not apparent in the July housing data from across Canada, the stage is increasingly being set for the return of a more active housing market, said Canadian Real Estate Association Chair James Mabey in a release. Within Ontario, sales in the north continued to show stronger growth than those elsewhere in the province. Single-family homes in Sault Ste. Marie were up 2.5% year-over-year, and those in North Bay were up 3.4%. Locally in Niagara in July, single-family house prices were down 4.7%, condominiums were down 2.6%, and townhouses were down 0.2% compared to July 2023, using seasonally adjusted numbers, unadjusted for inflation. The combined value of Ontario's real estate is now estimated to be a staggering $3.14 trillion, according to the latest report from the Municipal Property Assessment Corporation. This is an increase from the previous year's tally by $42 billion. Toronto plays a significant role in this valuation. The Municipal Property Assessment Corporation report indicates that property values in Toronto alone rose to $9.93 billion. This increase is attributed to new construction projects and ongoing developments across the city. One notable example of new construction contributing to this rise in value is the site at 407 Dundas Street West in Oakville. Developments like these are helping to bolster the overall value of real estate in Ontario. The Municipal Property Assessment Corporation, commonly referred to as MPAC, is responsible for assessing the value of properties across Ontario. Their assessments are crucial for determining property taxes and understanding market trends. This latest valuation underscores the dynamic nature of Ontario's real estate market, which continues to grow despite various economic challenges. The increase in property values is not just limited to Toronto. Various regions across Ontario have seen significant growth, contributing to the overall increase in the province's real estate value. This growth is a clear indicator of the ongoing demand for real estate in Ontario, driven by factors such as population growth, economic development, and investment in infrastructure. As we look ahead, it will be interesting to see how these trends evolve. With new projects continually breaking ground and the demand for housing remaining strong, Ontario's real estate market shows no signs of slowing down. This $314 trillion valuation is a testament to the resilience and attractiveness of the market. So what does this mean for property owners and potential buyers? For property owners, the increase in real estate value could mean higher property taxes, but it also indicates a robust market that could yield significant returns on investment. For potential buyers, it highlights the importance of staying informed and making strategic decisions in a competitive market. In summary, the latest report from MPAC highlights the substantial growth in Ontario's real estate market, with a combined value now estimated at $3.14 trillion. This growth is driven by new construction, ongoing developments, and a strong demand for housing. As always, it's essential to stay updated on market trends and make informed decisions, whether you're buying, selling, or investing in real estate. We've somehow reached the point in the commodification of real estate that finding a home anywhere near Toronto for less than $1 million is a harrowing task, especially if you're looking for something other than a shoebox condominium. Even after months of market stagnation, home prices in and around the city have failed to let up to any significant degree, and experts have varying opinions on whether they're about to surge or depreciate. Regardless of what the future holds, there are still some pockets of the Greater Toronto Area where you can nab a detached house for a reasonable price, by Ontario standards, as outlined in a new report from RE/MAX. As places like Schuylkill and Toronto's West End, including Islington, Arongate, and Etobicoke West Mall, experience gradual price gains, there are still some locales near enough to the city where you can score a deal, and also your own backyard. Buyers in search of affordability, the firm says, should look west and north of the city proper, specifically to Durham, Dufferin County, and York Region. Based on figures from the first half of the year, topping the list of the cheapest places for a detached home in the Toronto or Vancouver areas is Brock, about an hour and a half out of Toronto, directly north of Oshawa towards Lake Simcoe. The average price of a standalone house there is just $766,933, about the same as many condominiums in the city. Up next is Oshawa itself, where RE/MAX says the average price of a house is now $897,818. Also mentioned are the Ontario towns of Orangeville and Georgina, where detached homes are now an average of $926,139 and $930,086, respectively. The report notes that affordable housing options are, of course, perennially sought after in the region, especially for first-time home buyers, a demographic that has to be some 10 times wealthier now than historically. The company considers any place with average prices below the $1 million benchmark affordable, which says a lot about our times. Our final story for today comes from the Hawkesbury Detachment of the Ontario Provincial Police, or OPP, who are alerting residents about a rise in aggressive door-to-door sales and mortgage fraud in the area. The OPP has issued a warning to residents to stay vigilant against these fraudulent activities. According to the OPP, door-to-door sales have become increasingly prevalent in Hawkesbury, often leading to victims ending up with home services they do not need or want. In some cases, these fraudulent sales result in poor quality renovations, liens, or even an unwanted mortgage on the victim's home. Alarmingly, some victims may not even be aware that these fraudulent activities have occurred. In an effort to protect consumers from assertive and misleading contractors, Ontario banned certain types of unsolicited door-to-door sales back in 2018. This includes sales of air conditioners, air purifiers, duct cleaning, furnaces, water filters or softeners, water heaters, and bundles of these goods and services. Businesses are permitted to enter a home only if the visit is initiated by the consumer ahead of time. Despite these measures, the OPP reports that such crimes are continuing. The Hawkesbury Detachment notes that criminals are often persuasive, persistent, and aggressive in their efforts to ensure a contract is signed. In some cases, they may visit the homes of vulnerable residents and falsely claim to be affiliated with the Ontario government. In response to this issue, Ontario passed new legislation under the Homeowners Protection Act and the Personal Property Security Act this past June to further reduce this type of fraud. The OPP is encouraging residents to follow several tips to protect themselves and their families. First and foremost, only answer your door if you are expecting an invited guest. Do not allow unsolicited visitors into your home and be aware of the ban regarding unsolicited door-to-door sales. Hang up on unsolicited phone calls and never share personal information or copies of any bills or financial statements. It is also important not to make decisions on the spot. Take the time to investigate further and do not sign any blank documents or contracts. Always take the time to understand what you are signing and ask questions if anything is unclear. Additionally, do not answer questions on a phone or video call if someone is telling you how to respond. The OPP also recommends regularly checking on family members or others who might be vulnerable. Monitor their financial records and flag any suspicious transactions. Talk to your bank about a vulnerable loved one to prevent suspicious withdrawals. Understand that no renovations are free and visit canada.ca to review green grant opportunities. Other proactive steps include considering why someone has offered to help and how they know your situation. Check your credit history online at TransUnion and Equifax, look up your property on the Land Registry Ontario website, and install video cameras around your home or use video capturing doorbells. The OPP has also identified several red flags that should prompt individuals to turn away solicitors immediately. These red flags include being told you have won a class action lawsuit regarding the installation of your equipment, claims that your home is now a green home, qualifying for a grant that must be used for renovations, and unsolicited offers from financial companies to help you get out of payments or consolidate debt. Be wary if you are told renovations are free, if you do not have input on the renovations or materials used, or if you are pressured to start renovations right away. Anyone who believes they have been a victim of fraud should contact their local police and the Canadian Anti-Fraud Centre at 1-888-495-8501 or report the incident online on the fraud reporting system. Residents can also call Crime Stoppers at 1-800-222-8477 or report the incident online at ontariocrimestoppers.ca. That wraps up our episode for today. Thank you for tuning in to the Ontario Mortgage and Real Estate Insights podcast. Stay vigilant, stay informed, and we'll see you next time.